Well, that helps. Can you hear us now? Wow. Well, that's embarrassing. So I'm going to assume you didn't hear any of that before, and you just thought I was miming. Again, apologies for those of you who are very patient. Thank you, Michael, for yelling out. So welcome. I'm Trent Lund, your CEO at Wrkr. Karen Gilmore, our CFO.
Good morning.
And thank you very much for taking the time out of your busy schedules to hear about Wrkr and some of the great progress going on in the business. I just would like to start by a call out of thanks to Randolph Clinton, who recently, a couple of weeks ago, retired from the board. He will be sadly lost. We've all really enjoyed his leadership and support. On a personal note, I've worked with Randolph for many years. He assisted me in exiting the businesses from PwC, and we've worked together across a range of businesses. And I have most certainly appreciated his mentorship and support. And I think I speak on behalf of the board and Karen in that his tough questions and keeping us really focused on the market and return on shareholder has been highly valued. But busy times in his end of the market with the early stage businesses, and I know the bandwidth isn't there. So anyway, I appreciate his time. He will be sadly lost to us for now, but he'll be in touch, no doubt. So why don't we jump in? Just want to go through the quarterly with you. We've proposed a short presentation today so we can focus more on Q&A. But let me just kick off with a reminder. We have some new shareholders and new shareholders joining all the time. Some circa nearly 100 new shareholders since the capital raise. So I just will want to go through and just quickly remind people what Wrkr stands for. So very importantly, we have a very clear purpose and mission as a business, and that is to help Australian businesses and workers, so their employees, be ready to start work, make sure that their pay and super are processed correctly and on time, connect those employees to the right benefits, and really fabric of our business is about making compliance simple and actually indeed valuable. So we believe there's a long way to go in the Australian market, particularly for leveraging technology to do just that. But we're starting our mission by collaborating with super funds and payrolls as they digitise and transform that pay and super processing. That's the core starting point for our business. So when you hear us talk about our products, when we talk Wrkr Ready, we're talking about onboarding, we're talking about Wrkr Pay, we're talking about super processing and payroll processing, we're talking about Wrkr Benefits, we're talking about connecting people both to the right funds, to the right insurance within their funds for now and into the future, to a myriad of other benefits. We talk about the problem that we're solving. So again, just to be really clear, it's much harder than most people think unless you've had the task of employing and processing new members, new staff and payments. Many people don't realise just how complex it is and how tough the regulations are and some of the fine regimes in Australia. So the problem is really a compliance burden in hiring an employee, from identification to working check work rights to ensure somebody has the right visa, tax declarations, tax file number checks, setting up and choosing your super, and complying with the process all the way along through to bank details, licenses and credentials. An enormous amount of PII data being traversed mostly by email and paper, not in a single system, and often without the ability for organisations to have a single view of exactly where their employees are at, both in the pipeline to start, but most importantly in the pipeline to complete their compliance. And on the pay side, a myriad of from pay processing, disbursements through to super contributions, fund confirmation to the ATO, single touch payroll, and error handling and reconciliation. Some of the most complex tasks because it's done through, again, a myriad of third parties. And so Wrkr has worked very hard to bring these together and ensure where there's overlap of data, we actually take burden away from the employees, lift the standard of data quality, and to do that, actually, we have to maintain and hold a large amount of licenses, which frankly builds a moat around our business. This is not something a startup chooses to participate in out of the garage. This takes years and years of levels of compliance and data security, which we are very proud to maintain. But who needs this problem solved? Well, it may surprise most, but just a couple of quick stats I thought I'd pull out in Australia today. We've got, roughly on the hiring of employees, about 19.4 million jobs, about 1 million employers employing people across that range, over 15 million full-time employees now in Australia, but over 2.5 million job changes. That means people making super choices. There's 200,000 visas and 500,000 student visas, although declining a little now on an annual basis, so going to last year. So that's just tip of the iceberg for the hiring side of the challenge. And on the paying challenge, 43% of people are actually paid weekly in this country, 50% fortnightly. So you get the picture. It's a high frequency game for both pay and in the future with Payday Super, but still 500,000 super funds are late, 200,000 don't get paid. We're talking about half of a billion pay events per annum in the process. So every super fund, every payroll, every HRIS, and every employer in Australia cares about this problem. So it's a good space to be playing in. So without holding it further, I'll give to Karen just to run through some of the key financial highlights, and then we'll break into where we're performing at an operational level.
Thanks, Trent, and good morning to everybody. I think I say this every quarter, but it's been a busy quarter. We've had the completion of the successful capital raise and share purchase plan. We finalised a very strong year in the FY24 financial statements and audited annual reports, as well as the Australian Financial Services Licence Audit. We continued the investment into the MUFG Retirement Solutions, REST and Hong Kong implementations, and had continued discussions and progressed the pipeline quite significantly for opportunities in the HRM and integration space. So it's really great to see all of that. The team's been working very hard. So the combination of all of that, particularly with the capital raise and the SPP, the conversion of the convertible notes has seen us start the year with a strengthened balance sheet. So we're looking at using that balance sheet over the next year, 2 years for that continued investment in our industry solution, the API integrations directly into HRMs, payroll companies, etc., and working capital and further growth opportunities. So it's a great place for us to start in Q1. The net operating cash flows for the quarter were outflows of $57,000. This was slightly less than where we had budgeted to end up. This was predominantly due to a delay in doing some of the development work that we thought we would be doing with Art on Beam enhancements. Art had some change in management and change of the CEO, so that kind of delayed that work. Those delays have now kind of disappeared. We've had an approval of $2 million of budget of development works for those enhancements and we expect to see that occur in FY25. So those delays will make up into the next 3 quarters. The cash flows from the MUFG Retirement Solutions contracts were slightly lower than last quarter, but that was expected. The cash flows are really timed with milestones. It's on a timeline. It depends on the deliverables, and we're in line with those milestones and deliverables, but the cash, and that's what we had forecasted for this quarter. So we were seeing a slight decrease there in the cash receipts from MUFG. So I think, they're the basic things that I wanted to talk about, the highlights for today. I've talked about the balance sheet strength. We've seen the debt, obviously, with the conversion of the convertible notes come down from over 3.3 just to 100, approximately 100K now, which is to do with the insurance premium funding. And so, we're continuing to see our cost to income ratio improve slightly. It has slowed down a little bit from the concerted effort we made, the last 2 years. And we are seeing a slight flattening of that because we know that we're really heavily investing in this industry solution and payday preparedness. So that will continue into next quarter. We're really looking at beefing up our engineering capabilities. We've just hired a new head of product, and we're looking at someone to head up that API solution as well, to take full advantage of the sales pipeline opportunities in front of us. So we'll see those costs continue into Q2, and then we'll also be working on the pilot and the implementation for Hong Kong. So lots of activity this quarter leading into Christmas. So on that note, I will pass it back to Trent, and if you have any questions, please pop them into the Q&A.
Great. Thanks, Karen. So a couple of slides to go, and then I'd rather Q&A. We can get into some really open conversation. But look, a couple of things, a reminder of where our focus is, and then I'll give you an update on that. So one of the areas where we are investing this year is, fortunately, it's what I call a positive investment, in that it's been built, so we don't have to do the thinking. We just have to recode it into our core platform. But taking some key features from SMSF Hub, in particular the ability for an accountant to have a login, and while still maintaining the ATO access and privilege requirements, allowing that accountant to hold many entities, so many companies, in one login screen, and use their credentials to then look after many customers. This is a very important feature as we look at the ATO. We expect that they've now announced through the Treasury announcement that they will be decommissioning the Small Business Clearinghouse well before Payday Super. We expect that could happen in terms of no new companies coming on as soon as June, July of next year. And so we want to be ready for that. We know that the Small Business Clearinghouse represents about 980,000 employees, around about 240,000 businesses, possibly a little larger than that. Average of about six employees per business, but at least half, if not more, is accessed by accountants today on behalf of those employers. And so we know that if we can solve that gap, that puts us in the driving seat for what will be probably one of the largest chunks to come of potential members to process that has come to the market in some time. So that's key. Our team are working really well on that. The great news is when we're in conversations with some of the funds, we're already in a position to demonstrate a technical capability. It's just that movement. The second area is really the teams continue to work very, very closely with MUFG Retirement Solutions. In particular, both demonstration work, helping respond to and co-draft statements of work, and responding to RFPs. Right now, it's a fairly busy time in the market, but building out off the basis of the work we're doing in the pilot for REST, ensuring that we're not only building out those solutions and meeting the spec, but taking the combined value of the two of us, so the integration into Aspire, their key admin platform and turning that into a competitive advantage right now. Just a small side note that the work we've been doing with them in Hong Kong is around a different model, which is the pensions model, which operates very differently to superannuation in Australia, which is member to fund, it's employer to fund, back to employer to their employees. The build out of that actually is exactly the same as what is required for defined benefits. And so that means we're actually at the moment in Hong Kong working through a process that will actually make us relevant to a larger subset of funds in Australia, particularly those who are still supporting defined benefits programs. As a side note, we value that working collectively in the market. The final area where the team are working is the REST pilot. I know I get a lot of questions on the REST pilot, so I'll just try and demystify that a little here. We are really, a pilot is probably an unfair term for it. We are looking at a full system replacement of one of the systems operated by MUFG Retirement Solutions, that is SCH Online. REST obviously is a user of that platform, but we aren't looking just for like. We're ensuring that there are features and functions well above that market. And where we're getting feedback from the fund, we are taking our time to make sure we take the chance to do the uplift, because we think that will position us the best in market for what is the wish list of funds. Obviously, our product team is circling other funds to ensure that that we're tight and we're not just developing a wish list. And so there's a reasonable level of communication across some of the industry funds at the same time. But we'll continue to work for that. I would probably flag, given the time of year and where we're at, we are still progressing ahead. But as we get closer to the Christmas period, I am expecting the pilot to stretch out and elongate a little longer as we get feedback from customer users, particularly as they navigate their way through the retail period, Christmas trading period, which is one of their busiest, then straight into stock take. But to date, we're pretty excited by what we're learning and where we're taking it. And I would keep in mind it's not just a pilot for REST, but it is if you like, the feature driver for the broader industry fund footprint. And then, so we said FY25 in the strategy. I'm going to use this to refresh people each quarter just on where we're headed. But achieve market leadership in super. We said add 2 million Wrkr users, so that's TFNs. We still believe we're well on track for that this year. There'll be a timing for whether we can accelerate past that in terms of going live. It is going to be a very busy production year these last 3 quarters. And Karen mentioned the delays at ART have really, we're not seeing a shrinking in the work, unfortunately. Good for revenue, tough for the team. Just means we have to apply the resources to get that done in 3 quarters. We've obviously been using those resources well in our other projects, so we're not net behind. But we're pretty confident in that number, and certainly our targets internally are to exceed. Adding 2 HRIS platforms, we are well underway in our conversations in the HRIS side. We expect to hit that milestone. So that is, we've felt far further progressed in conversations. We are into pricing level conversations. So second, enable industry and regulatory change. This is an area I'm pretty excited by. Being optimised for payday super. We have done a lot of load testing on our own environments. We're very comfortable that we are ready for payday super. We have been getting feedback through our pilot and from MUFG on the way we reconcile payments and the way we closing out errors, that it is now really seen as a competitive advantage, particularly in payday super when the timing frequency is shorter. We'll talk more in over the next quarter, but we've had great engagement with with the regulators themselves, with Treasury, ATO, with Joe and the team participating across a range of areas, looking into the new standards of payday super and helping those standards evolve. Again, we're getting some unsolicited feedback that's very positive about the product and how aligned the product is to the ambition of the Treasury and regulation. So I'm excited by that. The leadership and new stapling reforms, that's really what I'm alluding to there. There's a lot of support for the approach that we've taken in our onboarding component and making it a plug-in that talks in a two-way manner to some of the leading HRIS platforms. Then increasing our payroll integrations. This is really coming a little faster. We're having to increase our headcount there to make sure we take advantage, but there is really strong appetite from the funds we're in conversation with around moving towards a true straight-through processing model. So the support of those funds, we think that will grow both to the back end of this year and probably be more of a priority again in 26. Cyber leadership, we continue to, I think, set a benchmark there, and we look forward actually in coming quarter to show a little bit of demonstration as to what the capability is. So we are, in short, on track. We're pretty excited. Mentioned before, revenue dip because we've got some pretty lumpy revenue right now. That's okay from our perspective. It's implementation based, and when we're spending around the implementation, it is a precursor to the back end. So that really is key to the operation of the business. We're progressing on track right now. Only comment I would say, maybe just to wrap this up, and I can't talk about clients by name or specifically, but I will say this: we had hoped payday super would drive real vigor from the funds in particular and the payrolls to really address and look for change. That has proven to be true. And so we are very happy with the level of interest and action at the fund level and the payroll level. So that's the summary. I'll leave it to that. Why don't we jump to questions? In the Q&A, you can type any question you like. We'll try to pick up and answer it. Oh, glad there's one's just popped in. There were none there, and this was going to be a first for us. So, Michael, I'm going to kick off with yours first. You mentioned being a leader for the broader industry fund sector. How does this compare to competitors, and are they responding? Yeah, great point. We're seeing two areas. I think we should be careful not to be too arrogant around the things we're doing on stapling. We're starting to see some followers in the onboarding side. I'm not sure we're talking apples with apples, but when people start to follow that, it means they're recognising and they're seeing some competitive push. Some of the larger players we're not seeing move forward or add features in the market. So obviously that's the largest incumbent. They are still fairly quiet. We are seeing some new competitors though enter around NPP and less direct competitors because they're not gateways. They don't process the data, but I think the payday super has shown an interest that 500 million transactions, either way you cut it. Some businesses are looking into that, particularly the NPP providers. we think that's a little misguided right now. NPP payments are straight through processing, and straight through error processing the funds admin platform simply can't support it. We're years off that being plausible. So right now we're really watching and leaning into that, but not concerned, if that helps. So yeah, they're responding, but they're responding in those who are responding. It's a follow at this point, but they may have deeper pockets. So we don't want to rest on any laurels. You want to go for one and on? Can you give us an update on potential revenue channels outside the industry funds or HRIS? What kind of ARPU and TFNs could that represent? Yeah, it's a good question. So if we separate from the funds, right, the funds, it's pretty clear where the aggregation points are, right? It's there's 200 odd funds out there, APRA regulated funds, a little bit more. But I think the other day I read that ART and Australian Super combined represent nearly 50% of all of the flows in for funds. So it's 200, but it's the big rocks in that market are pretty easy to throw a net around. In the HRIS part of the world, I'm finding that more interesting. Two reasons. Obviously, the cloud operators are price sensitive, and they represent the bigger ones down there. Represent circa you're talking about blocks of indirectly with businesses. They represent about the same size as Small Business Clearinghouse. Got 200,000 active employing businesses, probably for each of the majors, Xero and MYOB. They are providers who've been providing or working in that free space of super contributions. So I can see them being far more active. The larger US, we talk about SAP, in my mind, is the dominant. They still have the biggest footprint, and they are certainly one of the organisations we're looking very closely towards. So size-wise, I'd say you're dealing with 300 and something payroll providers that are pretty distributed and all targeting the same employer space, right? So it's a harder market to get to. You've got to be very picky and choosy about who you do your integrations with and work. Finish the last part. So the TFNs, it's a good doubling up. They're representing roughly the same TFNs that find their way into the major super funds, but it's an extra level of income on those same transactions. And we're finding in the payroll and HRIS space, they are more interested in closing out in one spot, so one-stop shop of those other compliance moments around visa and the likes. And in that space, you're looking at ARPUs that are far closer to between $22 and on the higher end, close to $100 for those in the medical field. So less customers, but definitely that's the range of ARPU in that space. Have I answered that?
Mm-hmm. The next one's also for you, I would say.
Oh, geez. Okay. Do you compete against the same providers for payroll integrations as you do for super distributions? No. That's interesting, Michael. Yeah. So pay is different to the super funds because it's somewhat unregulated. It's left to the banking market. So when we process wages, there are some payrolls who have their own wage processing, and in fact they leverage float in that where they can, but most have moved to direct credit near real time for pay. So pay is fairly distributed. And actually super is highly regulated, and you have to go through a gateway on the SuperStream network. Payday Super has kept those two disaggregated, and we think they'll come together now, and you're more inclined, if you've got to do both transactions at the same time, we think there will be a bite to take on some of that pay processing. Also because it's genuinely, unless you're completely geared for it, it's just hard work if you're a payroll. The hardest job is calculating someone's wage. The pay processing takes an entirely different set of skills and licenses. So, but yeah, different competitors. It's typically in-house on the pay, and we're trying to win on convenience in that space.
Okay, I can take the next one, which is for the next few quarters, can you call out any quarters that are likely to see lumpy revenues and/or costs? So yeah, Q2, we're going to have quite a lot of investment in the platform and the development and the implementation, and the milestones attached to the next kind of invoicing moment, and then therefore following the cash receipt timing is really looking at Q3 and Q4. So we'll see I guess cracker of a second half of the year in terms of the cash and the cash flow around that. We're completing the work, so our revenues are being recognized as we go through. You're just seeing that lumpy cash movement as we go. So yeah, Q2 probably I'm expecting not such a strong net operating cash flow, but then Q3 and Q4 we'll see some improvement in that.
Right. I'm gonna jump ahead to one briefly to Hester and ANZ are looking at using the Australian dollar, so the stable coin, which has been sort of piloted up through Australian Payments Plus, with ANZ really leading that work. We've kept a pretty close eye on that space. We actually looked to participate inside their innovation space a while ago, but felt it's probably good for wage and not that good for super at the minute. So the question is blockchain a threat for your business? No, look, we like blockchain technology. We're certainly looking and have done some pilots already, but are using the tokenization element of blockchain for credentials. I think is a really important path, and that'll be well and truly in sync with where the MyID with government goes. But as for stablecoin, Hester is piloting at the moment using I'm going to forget the name of the admin platform. Someone will probably throw it in the chat for me and remind me. Anyway, I'll remember it in a second. Anyway, they are currently looking at that. That is a blockchain-based admin platform. So it makes sense. If you take a stablecoin payment and push it straight into the blockchain, you'll be able to start your distributed ledger earlier. That's great, except very few are on that platform. So it will require a fair upgrade and a totally different build out from Iris, Bivera, and MUFG, which is probably about over 95% of the market. So we're not immediately concerned. That said, we could adhere to that standard quite comfortably. The only element of it is payments coming in directly and linked to an employee makes a lot of sense if you want to track an employee's cash in and start tracking from that very moment their investment cycle. Except where does the data come from? It comes from existing payroll systems, and that quality of data coming in is really questionable. We still remove an enormous amount of errors through our clearinghouse and payments process. And so straight through processing when you're high on errors is going to be an SLA debacle for super funds. And I'm sure they're looking at that. So I was surprised to see the enthusiasm of the announcement that early. It felt like it was a good discussion point off the back of Treasury's request for NPP, which is required by 2030. So a fair way out. So yeah, I don't want to, not talking it down. If we had an endless pot of cash, we'd have a pilot going there too. But we'll work on the things we think are probably more time bound. Next one up the top. Is there dialogue with any corporate superannuation funds in regards to payday super. Look, payday super impacts everyone. The corporate funds we are seeing, particularly where they're managed, if you took any one of them, take a Woolworths, Woolworths has, a group of staff in the corporate fund, and then the bulk of their staff, on award and the likes that are processing through the various standard choice funds. So it definitely comes up there as impacted as any. We have built our onboarding and our employer portal to comply with both on behalf of a fund. But I'll be honest, we're not seeing a huge level of nervousness, and I would put it into the bucket of those in corporate funds at the high end are possibly already paying monthly and already doing their super processing monthly because it's being picked up by the super funds, the processing charge. So it isn't it's not an economic decision for them or a change decision for them right now. So they've been a lot more quiet than certainly the standard employment business.
I can take a couple of questions. First one, do you expect capitalised costs to remain around current levels for the next few quarters? I do for at least the next 2 quarters. Then we'll look at expect the platform to be kind of that MVP state. We've completed the pilot with REST. We'll be looking at where the pipeline is at that point. Development may then shift to, our API solution and other product features. But definitely for the next 2 quarters, I'm forecasting that will remain consistent as Q1. And then if we're to look at the next question, were the cost savings achieved across corporate and admin wages operating lines related to the new timeframe for arts development work? Now, as Trent mentioned earlier, even though there was the delay in art, we didn't reduce our resourcing levels. Those resources were just diverted to make sure that we could speed up the work on the industry solution, looking into that payday super requirements, looking at the small business clearinghouse opportunities and other product sets now that we've got the new head of product on what that future is in feature development. So definitely the team was also working very hard on as Trent mentioned, the market's really active with tenders, RFPs, as well as the HRIS sales pipeline. So those savings didn't come from art, but they did just come from really tight control of the costs. There was no extraneous costs in the quarter. We will see the costs pick up a little. We've had obviously an increase in the superannuation rate this year. Across the board, we're looking at getting new resources in, and we had an increase in pay first time in 2 years. So we will see a bump up in those staff costs over the coming quarters.
And I'll tackle one from Mark at the end there. When do you expect Wrkr Ready business to pick up? Are competitors such as Kinatico moving faster, taking the opportunity? Look, we see, we're seeing strong selling and work from both Kinatico and Wrkr as 2 examples. They tend to be focused in some of the adjacencies than the core, if you like, Wrkr Ready pieces that we do. So I think there's still opportunity to collaborate as much as compete, truth be told. But our strategy is actually we've taken an embedded strategy. So where we're direct, we've gone direct by solving that quite difficult area around the tax, super, and bank space for players like Workday is a good example. I think I mentioned 140 to 150 major projects going around Australia, and they have got excellent coverage of what I'd call your 2,000 employees and upwards, sector of the market. So, we'll run pretty fast in that space, but actually our embedded with the super funds is far more exciting. So we are expecting when I talk about those next 2 million Wrkr users coming on, both success with REST and the next fund to 2 funds, we are expecting that our embedded onboarding moment to be quite a core advantage for us. So the software is implemented, signed up for, and made available with training to manage the super process, and then very easy for us to expand out with extra API and touch points. So our value will actually remain strong whether we're creating the compliance moment or simply delivering the compliance moment through our secure infrastructure and in that one-stop shop manner. So we think we're hedging pretty well there. So I'm confident our strategy is a winning one, but it comes with the upside comes with one very clear downside, and that is we're going to hit massive numbers with the super funds, but at the pace of the super funds, which means we're going to be working all the way up to 2026 before people really get to see the impact of that. That said, the income is built into our pricing with the super funds as well. So I hope that answers your question, Mark. I think similar question. So outside of super payments, how big do you think the market is for various regulatory checks in Australia, i.e. visa checks, police checks, APRA medical checks? Can you give us some examples of the uplift of those products? Yeah. So at a visa, I'll start with that. That's probably one of the largest visa checks. You've got about 200,000 new migrants, 500,000 student visas at any point in time. That's 700,000, but they are typically people fairly active, new to the country or in a student position. They're taking part-time roles and moving from organisation to organisation. So the volume of those checks is actually higher than the market size itself of 700,000. So we sort of see a market of around about 1 to 1.5 million of those checks. Keep in mind, visa checks are either vary from monthly to every 2 months. So you're multiplying that by 6. So they're fairly rich opportunities. So visas is one of the higher because they're complex, highly regulated, difficult to do. Second is license credentials. So everyone who drives in any capacity for work insurance. The third in terms of volume, definitely then you get into what we call the industry bundles, which are medical APRA checks. So everyone who works in an aged care facility, everyone in a chemist, in a pharmacy role, anyone with a medical license is captured under that frame. And every industry, whether it's white cards for in the blue collar and so on, working with children's checks across childcare. Nearly every industry has 1, 2, or 3 of those moments. What we like about them is each moment, the effort for someone to go about doing it is well over $10. And so the price point to solve them is actually quite profitable if you can reach scale. We think we've been clever in 2 ways. One, obviously our reach to market through super funds will give us the scale, but actually the investment in all of our technology to date means to go and add one of these is fairly trivial because we already meet the highest standards for government. So if it's a government body, it's a walk in the park for us to connect. And if they're private bodies by the same standard, we typically, if they are digitally available, connecting is easy. So I hope that gives a bit of background. I'm excited by that area. Much better margin and more targeted selling and more targeted marketing, digital marketing. But I want to make sure I secure the base first. So we talk about 7 million users, and we're hitting that target up of $7. I'm all about getting 7 million users first. Then we can go as fast as we want. So any other in there?
One last one.
How much? How much work have you done on opportunities in different markets internationally? If and when could you see market expansion in the future? Look, we keep a close eye on the international markets. Japan, UK, Canada, there's that. Let's take that belt, and Hong Kong, all are running more of a pension market model. So our work with MUFG in Hong Kong will put us in good stead. There are other emerging markets in Middle East that are already starting to want to follow and adopt the Australian superannuation or a quasi model similar. So our view there is we are probably next 12, 18 months, we're a bit head down on the Australian market, but as a core business. But I'm certainly remaining focused and in constant communications with the team at MUFG Retirement Solutions, because they have strong ambitions globally, strong footprints in each of those areas, particularly UK and Hong Kong, and are looking to drive that expansion. So ours is a work with them strategy. I don't think we've got the bandwidth to go knocking on those markets directly. I think they take a lot of warming and a lot of investment. So we're pick your best player, and they're the best for us right now, given our current footprint. There we go. So we don't have other questions, and we are on time, even though I spent the first 5 minutes talking to myself without the volume on. So thank you to everyone who joined. I've taken a recording. I will put it on online for you. As you know, we're very transparent. We have our investor hub. I genuinely encourage you to join it. We send out all of our notices and all of our recordings via that investment hub, and answer any questions nearly immediately. So as you know, I'm not that hard to track down. Always happy to answer a question. So thanks again. We appreciate you as shareholders, and we're very much excited by the position we're in right now. Thank you.
Thank you.